What's up guys, welcome back to InvestingPH. So today we are going to evaluate MerryMart, which had its IPO on January of 2020. So this is still a fairly small company in the retail industry, but let's see if it's a good investment or not. Now if you're interested in watching my analysis of other retail companies afterwards to compare it, there's a link in the description below. I have an analysis of All Day, Pure Gold, and Robinsons Retail Holdings. So with that said, let's start. MerryMart Consumer Corporation, formerly Injap Supermart Incorporated, is an emerging consumer-focused retail company principally engaged in the operation of retail stores in the supermarket and household essentials category. Although this company had its IPO debut in January of 2020, MerryMart was incorporated way back in 2009. Their groceries are full-size supermarkets offering a wide variety of food and non-food products with up to 20,000 SKUs. Now their vision for 2030 is to have 1,200 MerryMart branches nationwide with an aim of reaching 120 billion in system-wide sales revenue. They aim to cover all the grocery retail categories from small, medium, and large stores. Their large stores, namely MerryMart Grocery, is a full-size supermarket that offers a wide variety of food and non-food products, from personal care to pharmaceutical as well, caters to lower to middle-income consumers. For their medium size, which is MerryMart Market, is a specialized grocery that offers a larger selection of premium and imported grocery items. Now this one targets the middle to high-income consumers in central business districts and other urbanized communities. And their small-sized grocery, which is MerryMart Store, which is a 3-in-1 concept that combines a mini grocery, personal care shop, and pharmacy. This will cater to the general population of each community and neighborhood it serves. Now we all know in the COVID season, a lot of businesses were affected. This is why some upgrades were needed. On September 23, 2020, MerryMart has signed an agreement with Foodpanda Philippines to operate and pioneer the dark grocery store concept in the Philippines. This aims to become the first 15-minute grocery delivery service in the country. Now, dark groceries are branches that will generally be invisible and will solely cater to online deliveries within the vicinity. As of December 31, 2020, MerryMart has 6 operational dark stores, and as of the same time as well, these are all the operating branches of MerryMart. They have 25 branches with 22 new stores in 2020 across the country, and they have 9 additional branches that opened in 2021. Let's see in their next annual report if this has increased, since we can see most of their stores was opened only in 2020 and 2021. Now in January 15, 2021, MerryMart also launched its Wholesale Club program. This is open for business for individual memberships. Also, MerryMart plans to open its first drive-thru store located on Diversion Road, Iloilo City. For their corporate structure, we have Injap Investment Incorporated owning 79.2% and the public by 20.8% of the total shares. Now let's go to their financials. I would still be following my checklist for a quick look at the company's financial health. So to understand more how I evaluate stocks, I suggest you watch my other stock analysis videos as well, especially my valuation for other retail companies. Starting with the revenue, we can see it's been increasing ever since 2017, even amidst the pandemic. Their business wasn't that affected and it even had a good growth. For their latest 12-month, they already have a positive growth. For their net income, the only time they had a negative growth was in 2019, but they managed to recover it quite well in 2020 and in their latest 12-month. With this, for their revenue, it had a 16.92% compounded growth this 5 years, and for their net income, a compounded growth of 23.19%, so a good growth for them. And for their net income margin, we can see they are averaging around 1.40%. So this is low compared to other retail companies. All Day has a margin of 2.56% in 3 years, Pure Gold 4.77% in 5 years, and Robinsons Retail Holdings 3.43%. So they are lagging behind in terms of producing net profits from their revenue. One reason for this is they have higher operating expenses, which leads to lower net income for them. Though it's like that, their net income has still grown quite well in the past 5 years. For their equity, since they are fairly new, and like in the description a while ago, 22 out of 25 stores were opened just this 2020 alone. So most of their growth only happened in those 2 years. And since it's like that, I will only look at their 2-year ROE average, which is 2020 and the latest 12-month. at which their ROE is only at 2.73%, which is low. Well, this is a startup company to begin with. Comparing it to other retail companies, All Day has 11.1% 3-year ROE average, Pure Gold 11.5%, and Robinsons Retail Holdings 6.3%, so they fall short on this one. Moving on to their debt to equity, they have a debt to equity ratio of 1.08 in their latest 12 months, which is great for a small company. All Day has 2.46, Pure Gold 0.77, Robinsons Retail Holdings 0.75. As for their free cash flow, like other growth stocks, its FCF is negative. This is fairly normal for new companies, like All Day also has negative FCF. But for well-established companies like Pure Gold and Robinsons Retail Holdings, mostly their FCF is positive. Now, since MerryMart's FCF is negative, it is sure that they won't be able to pay their long-term debt using it. Comparing it to the others, All Day, as mentioned a while ago, has negative FCF. Pure Gold can pay their long-term debt in just under 1.25 years, and Robinsons Retail Holdings has no long-term debt. Now, for their current ratio, they have a current ratio of 1.33 in their latest 12 months, meaning they have 1.33 peso of current assets for every 1 peso of current liabilities. What I usually look for is for this to be above 1. Comparing it to the other companies, All Day 1.01, Pure Gold 5.78, and Robinsons Retail Holdings 1.44. Now, for the price to earnings ratio, their PE ratio is at a whopping 271.39, meaning its price is trading 271 times compared to what the company is earning. So it's really like a startup company. You are betting big that the company would grow in the future to catch up to its current valuation, like what we've seen earlier. Although yes, they aren't new in the retail business since they started in 2009 with 2 stores, but most of its stores right now was open just this 2020 alone. So this is the only troublesome part when analyzing new companies. It's more on the speculation side that the company can follow through all their plans. Now, moving on to their dividends, they still have yet to pay one. Since of course, for a starting company, don't expect for dividends, since mostly the company would rather invest their earnings to grow their business instead of giving it out to shareholders. But for those who are willing to wait for the company to grow in the future, MerryMart's dividend policy provides that up to 30% of the preceding fiscal year's net income after tax can be declared as dividends. So this is if the company would be stable in the future, that they no longer need to use most of their earnings to grow the company. Moving on to their moat, what is their competitive advantage towards their competitors? Now, although MerryMart's goal is to target all consumers from low to high income, and they are using technology to reach more customers with their app and their dark stores as mentioned a while ago, this for me is still not enough to be considered a good enough moat. Since it only just started, we don't have a clue if all of this would be stable in the future, that if they can follow through all of their plans. Although on the brighter side, for a new company, their debt is well managed, as we've seen a while ago. And although they are new, they are still a branch of a well-known and established company. Take note of that. But again, as of now, I can't see any moat for it. Maybe in the future as the company becomes more established. Now, for their leader, their chairman and CEO is Edgar J. Sia. He is the founder of Mang Inasal and co-founder, chairman, and CEO of Double Dragon. So he has a lot of companies under him. And with how well those companies are, this we can see he has a lot of experience handling and growing his companies. Now, as for my buy below price, my computed intrinsic value for them is at 2.25, and for my margin of safety, I use 50% for it since my projections are quite on the speculative side since we only have a few years of data, this having a buy below price of 1.12. So with that, this ends my analysis for today. Now for me, I don't usually invest in new companies since like what I mentioned earlier, it's hard to project how well the company will grow in the future. Your projections are more on the speculative side since you only have few years of data. You don't know if the company would follow through all of their plans. But anyway, if you're right, yes, you can earn a lot from growth stocks like this. But if you're wrong, then that's a big loss as well. And you also don't have dividends to wait for the stock price to go up if that happens. That's why I tend to stay away from investing in companies like this who are exaggeratedly priced. Although yes, I may lose a great opportunity, but I just don't like to have a big feeling of uncertainty in my investments. Anyway, that's just my thought. Again, if you want to watch my other stock analysis of other retail companies, link in the description below. So if you have any information about MerryMart, do share it to us in the comment section. And before you leave, I would really appreciate it if you click the like button, and if you still aren't subscribed yet, might as well hit the subscribe button as well. So thank you and see you in the next video.